Navy, do you drink? Hey, you might want to start. I hope you're not logging into your portfolio today, folks, because my God, we are heading into one of the most critical tech earnings season we've had in a very long time. And, you know, Netflix kind of started the vibe for us. They're kind of setting the stage, the tone for this feeling, and it's not good. It's by far not good, guys. We're going to be taking a look at the very little bits of green that we can dig out of this market where some people are celebrating. And heck, if you're one of those cash flow value investors, those commodity players, you're kind of sitting back laughing at us today as we kind of just get absolutely wrecked. But even you, value investor, there's some stocks out there that you should be paying attention and looking to buying, because I have been stacking dividends. I didn't even realize until I logged into my accounts today that I've got over $1,000 in dividends, and I don't know where to invest them because I'm just waiting, I'm just watching and just seeing where things are going. And if my rambling and my interest kind of follow suit with your interest, just consider hitting that like button, maybe subscribe for those updates, guys, because let's kick it off with Netflix here. Netflix, guys, take a look at this. After hours, it is down 18.8%, almost $100, closed at 508. Not because of bad earnings either. That's the crazy part. I mean, look at this. I mean, the Q4 EPS was $1.33. The estimates were 81 cents. Absolutely slaughtered. Revenue met exactly, but where the pain starts to come in is the lowered guidance. I mean, Netflix said that, hey, we're only expecting Q1 to hit about $2.86 against the estimate of $3.37. Revenue is lower than expected, not by much, not enough to justify maybe a 20% drop, but that has to make you question, you know, were these things getting a little overvalued? Because this is leading to true correction territory in the broader NASDAQ, right? The NASDAQ's well over 10% down now. It's going to open a lot lower tomorrow, especially when you look at some of the larger caps that I hold in my watch list here. I mean, take a look at this, guys. Outside of crypto, which has been flat, mind-blowing, the most volatile market on the planet is showing some stability. Meanwhile, Tesla's back into the 900s here. I mean, take a look at all of these. Google, Microsoft, Apple, all down in the 2% plus range. I mean, I would be surprised if Facebook dumps below 300. If it does, hey, I am going to be buying more. I don't care. It's my largest position, right? But take a look, man. Another continued sell-off in small caps as well, like slaughtered. I mean, HYLN dropped another 7% today. I mean, all of them. Just what's doing well, though? I mean, let's ask ourselves that. Well, SOFI is a many favorited SPAC that came to the market, and this thing jumped up 10%, and this is incredible to get any kind of volume like this out of this market. And we are sitting in some pretty good lows here, leading to some pretty intriguing buying opportunities with SOFI. If I was looking at speculative risk, I'd be kind of going here, because basically SOFI got approved to become a real bank. A real bank, guys. I don't think that's an easy thing to achieve, and considering how great and how fast their business is already going, I mean, just take a look at this. Let's go into the financials real quick. Annually and quarter over quarter this year, there's been growth, like rapid growth. Like typically when you can post quarter over quarter growth, it's a rarity in the market, like a true rarity for most companies, right? So I mean, I'm very bullish on SOFI. What can I say? But I'm not a fan of Peloton. Actually, I don't own any of these stocks. Just keep in mind, these are just personal opinions. I got no stake in these companies. But Peloton, guys, trying to control their own supply and demand. This is where things get intriguing, right? This thing's down 23% in one day. Oh my God, guys, take a look at the long chart on this. This kind of came into those pandemic plays that are just getting, oh God, enough that you'd open a bottle of vodka any day of the week here. And I find it really intriguing, considering this isn't like a commodity market where they're more manipulated. Commodities can be very manipulated to some degrees, but Peloton, guys, they're just selling bikes with screens and subscriptions on them. And guess what? They halted production. Basically, Peloton is temporarily halting production of its connected fitness product as consumer demand wanes and company looks to control cost, according to the internal documents obtained by CNBC. So I don't know. I guess people are trying to buy used ones. Nobody wants to spend thousands of dollars on a Peloton like they used to. And it's leading them to say, hey, why don't we pull some of the supply off the market and see if we can drive more demand? I mean, it's almost silly at this point. It's very bearish. It's probably the most bearish thing a company could possibly say. Hey, we're losing too much demand, so why don't we try and control it? That usually doesn't lead to any better returns, in my humble opinion here. So, sorry, Peloton. That's painful as all hell. But let's take a look at some of the other stocks that have been interesting, like Rivian. This bubbly EV market we've all been discussing. Tesla can fall into that basket, and I know I'm a Tesla shareholder, but, you know, when Rivian hit $100 billion in value, it was no surprise, guys, when a company didn't even deliver any real amount of vehicles. Like, literally, what was the math? I think Elon said maybe they should be delivering, like, at least a full vehicle for every billion that existed on their market cap, because I don't even think they had 100 vehicles delivered. But take a look at this, guys, down 62.2%. Oh my God. Tattoo Chef, Jeremy, a financial education favorite here. Yeah, we talked about this one the other day. Yeah, it's just getting worse. It's just like, this is what I always say about stocks, guys. There's no bottom. It doesn't matter how low they go, they can always go lower. So where am I interested in this market? Well, you should know. You guys got some common sense going on in here. Nvidia, some of these metaverse, highly technological, advanced for the future kind of plays. And this thing is starting to become attractive to me. We're not there just yet. I'm really hoping this sell-off excels into some of my favorite companies because, if we can get, it's down 20%. I would like to see a 30, 40% pullback or even more if I can get it because these companies are highly, highly valued, right? So, these are the discount areas that break the trend lines and make me giddy inside. I know you're going to always overpay for an Nvidia, but I didn't want to buy this top here, man. I told you guys, if this thing starts pulling down 250, now we're well below that. If it keeps dropping, my eyeballs are going to stay on it until we see somewhat of a turnaround. Look at Amazon, another great company here, guys. And I know these aren't dividend kind of value plays, which we're going to talk about on the other spectrum in a second, but look at this, guys. Amazon has just not been a fun player here. It's down almost 17.5%, but again, follow suit with a lot of these other companies, your Microsofts, your Facebooks, etc. But because I don't own these companies yet, these are the ones that are kind of primarily taking some of my attention here because I'd love to own just the broader QQQ ETF. I know a lot of people have been buying into those dips on that, but I really like kind of just building out those top 10 holdings that I think have the most potential for the future. And it's bode very well for my portfolio in the past. And I think this is another opportunity to potentially add some more diversity by picking up some of these other incredible companies, right? So let's talk about some of the dividend plays because honestly, cash flow is king in this market. No growth is going to be doing anything for anybody. Anybody cash flowing that already maxed out all of their spending, that's where they're going to get most of their new buying opportunity and they're buying cash flow from, like myself. I'm waiting to get taxes done. Until I know what my tax situation is, I have a hard time spending the cash that I have. So much money for the government, so I'm really hoping that there's some bleed room there. But in the meantime, I'm looking at dividends, man. $1,000 sitting between my accounts. And honestly, guys, when we're talking about cash flow and value plays here, there's a lot of companies that I wish I bought in the 2020 crash that I never did. And McDonald's was truly one of those because this is kind of one of these companies where we all use it. McDonald's is OG. They're getting into some of the AI stuff and trying to automate a lot of their business. And I think fast food will be one of the first real big automations to hit society in a major impactful way. But after that run up of 70% from those lows in 2020, and again, it has underperformed the broader market. But from a dividend standpoint, guys, this is truly one of those kings. And if we could see a pullback back to the $200 range, start seeing that yield get up to 2.5%, 3%, this is where it becomes intriguing, right? Because unfortunately, there's a lot of companies doing great. Like I don't want to be buying, say Procter and Gamble in here. A lot of those companies that are still trending up, I want to be finding those bigger discounts in the dividend world, right? So we could also talk about things like Starbucks. Look at Starbucks down 24%. The yield is becoming more attractive again, guys. And when you can start locking in these 2 to 3% yields, that's when I get more entertained by these staples that I've never owned, that I know are huge proponents of people like PPCE and a lot of those value investor and dividend and growth investors out there. So that's where some of my interests are currently lying in this market, folks. But I want to know what you think. What are you doing? How do you feel about this? And I know you don't feel good if you're holding too many small caps. And unfortunately, a lot of them are probably going to become penny stocks, which is insane, right? But anyways, let me know what you think. I'm going to be posting a video right after this with a company I've worked with over a year in the nat gas space that's done surprisingly well through all this. I don't know. It's so weird how you can just find these outliers in small caps that somehow are not even being affected by any of this. But anyways, let me know what you think. Stay cool, stay awesome, and I look forward to catching you in the next one.